Hey, what's up, fam? My name is Brehon, and I would like to welcome you guys back to the channel where we love to focus on our own financial and personal development. Now, family, I hope you guys are having an amazing day, and I hope your week is off to a great start. Now, before I get started with the presentation, I'd like to give you a word out of a book that I'm currently reading, a book that's in my library, Unstoppable Confidence: How to Use the Power of NLP to Be More Dynamic and Successful by Kent Sayer. Now, if you're interested in a book like this, the link is in the description, okay? I think this is a book that everyone should have in their library. All right, so here we go. We are naturally drawn to confident people. Imagine what it would be like to have people coming up to you just wanting to meet you simply because you are so confident that you automatically make an impression in their minds as being somebody different. Imagine how it would feel to exude an attractive energy, one that radiates out and attracts people to you. Again, family, confidence is everything. You know, believing in your abilities, believing in your ideas, believing in your goals, and having the courage and confidence to step out on those and firmly believe deep in your heart in what you are trying to achieve in life. It all starts with faith and also having the confidence to go after your dreams. All right. Now, we're going to start with the presentation. Is the stock market going to crash? All right. Now, one other thing real quick. I get, emails about some of my t-shirts that I wear. I have an Amazon channel where I have various t-shirts set up on Amazon. You can have them shipped to you in a couple of days. This one here is one of my favorite t-shirts, Buy Stocks and Chill. Outstanding design by my designer. The link is also in the description. Okay. Now, when it comes to the stock market, the Fed can truly impact whether we go up, whether we trend up, whether money comes into the market, or whether we fall or trend down or money leaves the market. And one of the phrases they like to use is quantitative easing. So when it comes to quantitative easing, basically what that is saying is that they're going to lower the interest rates. And as a result, the banks can loan out more money. And as a result, people have access to more money and they can pay that money back at lower interest rates. So over the past decade, we've been having quantitative easing. The Fed is printing more money. The Fed is lowering the interest rates, and banks have more money to access. And as a result, the population, the masses, the people have more access to money. So you're able to buy larger homes for 2% interest, 1.7% interest, 2.3% interest. So you have an abundance amount of money when the Fed the Fed is performing quantitative easing. All right. Again, the Fed, they're just printing money. They're printing money. They're putting more money into the economy for overall success, right? So not only does the stock market succeed, the everyday person has, lower prices. So the food is a little less expensive. The gas is a little less expensive. Everything is better when the Fed is printing money. All right. And again, when the Fed is printing money, the stock market loves it, because as long as people have more money available to them, the more money they are going to spend. So they are going to buy, items for their home. They're going to spend money in the tech sector. People are going to have access to start more businesses, take more risk, and do more things, overcome more challenges when you have access to money. And having access to that capital, the stock market sees this, and this is an opportunity for large investors to buy into more companies. So they buy into more companies, and as a result, the stock market continues to move upwardly in a positive direction, and everyone wins, whether it's saving your money in a DPS, whether it's saving your money in a 401k, whether it's putting your money in an IRA. When the stock market is winning, everyone wins. Okay. Now, what we're currently going through is quantitative tightening, right? And so with quantitative tightening, what they're doing is they're taking money out of the stock market. Okay, so every time they come out, Mr. Powell comes out and he announced that he's going to increase the interest rates, right? He is basically increasing the overall rate, the rates that the banks is going to have to pay back, and as a result, when the banks loan out money, they are going to increase their overall interest rates. Now, with quantitative easing, with quantitative tightening, it is designed to take money out of the market, right? And as people have less money available, less money to spend, the prices of things should go down. So with quantitative tightening, the overall goal is to lower the value of houses, right? To lower the gas prices, to lower the food prices, to lower the prices of everyday items for everyday Americans. Because again, with prices just skyrocketing, right? Gas is $5 in some states, $7 in other states. We have had a decrease in gas prices only because the president, Joe Biden, is releasing 1 billion barrels a day of our oil reserves. So that is the only reason why gas prices are going down. It has absolutely nothing to do with the Fed currently. But with quantitative tightening, I've noticed that I'm actually been looking for a new car, and I can see that car prices are coming down. If you go to Zillow or any of these home sale websites, you can see that the housing prices are starting to decline a little bit. And they say that for every percentage point, the value of the homes come down 10,000 or 20,000 or something like that. But you could definitely take a look into that. All right. Now, so once the Fed start mentioning quantitative tightening, they came out with a plan. And from June, July, and August, the Fed has stated that their plan was to take out over $100 billion out of circulation. And what happened? They didn't take out that $110 billion. Now, we know that, it's hard to trust anything that the government is going to do. And there's a lot of rationale behind it. Some people are saying that because the elections are around the corner, they don't want to, crush the market or put too much of a damper on the economy. So that's one scenario. But instead of taking that $110 billion out of the economy, they had only taken out 50 billion, right? They had only taken out 50 billion. And so the Fed came out again with another plan, right? This is another plan. So Mr. Powell came out and said, Jerome Powell said, hey, the economy prices aren't adjusting as fast as we would like them to adjust. So what's going to happen? We're going to continue raising our interest rates until the prices of everything come down. Lower housing prices, lower food prices, lower gas prices, lower prices for all the retail items, lower prices for all of our necessities, right? So what is the plan now? The plan is to begin taking $90 billion out of the economy on a monthly basis. Well, they had a strategy to take $110 billion out of the circulation within a 3-month period. Now, do we think they're going to take $90 billion out of circulation on a monthly basis? That all remains to be seen. And the strategy is to continuously take money out of circulation for the next 2 to 3 years. Now, as long as the Fed continues with this strategy, the stock market, the economy will ultimately suffer. And Jerome Powell is pretty much saying that in order for us to get prices down to an acceptable level, people need to suffer. Some people are going to suffer. There are going to be layoffs. There are going to be As a result of massive layoffs, there are going to be businesses that's going to have to close their doors. There are going to be people that's going to foreclose on homes. There are going to be a lot of these real estate companies, these real estate guys that has, a tremendous amount of assets under their portfolio. They're not going to be able to sell a lot of these homes. So as a result, eventually they're going to have to unload these homes, right? They said that home sales are dropping because, again, 8-9 months ago, you could buy a home 3%. Now you're looking at 6% interest. So that's a huge amount when it comes to purchasing a home, a huge price difference. So now we're going to have some rough times ahead. That is what Mr. Jerome Powell is saying. But can we truly believe that? With the election around the corner in the next 4 weeks, I think that I think the Fed is going to take a lot less than the $90 billion out of the economy, because they don't want the economy or the stock market to crash heading to an election. Because on election day, and when you look into your 401k and you're down 20%, 30%, especially if you're going to be retiring this year. So if you're retiring this year and you continuously see your retirement portfolio, your IRA, your TSPs, if you continue seeing them go in a downward direction, more than likely when you head to the polls, you may vote for the other party. And so what the Fed or what people are speculating is that they don't want the stock market to impact your choice when it comes to voting. But everything revolves around money, right? So you do have some people that are committed to one party. You have a certain amount of people that are committed to the other party. And you have people in the middle that's going to place their vote based on how the current economy is affecting them. All right. And you have a lot of people out there that's going to that's going to vote that way. All right. Now, I hope I added some value to you. All right. I hope I added some value to you. Now, if I did, hey, please leave a like, hit that subscribe button, keep coming back for more wealth building information. Peace.